The Australian dollar's decline, the comprehensive analysis. The Australian dollar, AUD, is experiencing a downturn against the US dollar, USD, due to heightened risk aversion among traders ahead of crucial US inflation data. This cautious sentiment is further fueled by the potential impact of China's economic conditions on the AUD, given the nation's significant trade ties with Australia. Market dynamics and rate cut speculations. The Australian dollar to US dollar pair faces challenges as traders anticipate a potential rate cut by the Reserve Bank of Australia, RBA, in the near future. Australia's recent employment report revealed an unexpected surge in the jobless rate, reaching its highest level in nearly 4 years in September. This unexpected spike has increased the odds of a 25 basis point rate cut to 70%, a significant jump from the previous week's 40%. Traders are now keenly monitoring economic indicators, from flash PMI readings to Q3 CPI figures, to decipher the RBA's next move. Trade agreement and market sentiment. The AUD finds support in the improved market sentiment surrounding the US-Australia trade agreement. President Trump and Prime Minister Albanese's $8.5 billion agreement on critical minerals aims to secure access to Australia's rare earth resources, despite China's export controls. Both nations have also pledged to invest at least $1 billion in mining and processing projects over the next 6 months, bolstering market confidence. Technical analysis and price movements. The Australian dollar to US dollar pair is trading around 0.6490, with technical analysis indicating a bearish bias. The pair is within a descending channel, and the 14-day RSI remains below 50, reinforcing the bearish outlook. The immediate support levels are the 4-month low of 0.6414 and the lower boundary of the descending channel at 0.6400. A break below these levels could lead to a test of the 5-month low of 0.6372. Psychological barrier and short-term momentum. The Australian dollar to US dollar pair is currently testing the psychological barrier at 0.6500, aligned with the 9-day EMA. Further advances would enhance short-term price momentum, potentially leading to a test of the 50-day EMA at 0.6541 and the descending channel's upper boundary at 0.6560. Australian dollar's key drivers. The Australian dollar's performance is significantly influenced by the Reserve Bank of Australia's interest rate decisions. Australia's resource-rich status and the price of iron ore, its largest export, also play a pivotal role. The health of the Chinese economy, as Australia's largest trading partner, and domestic factors like inflation, growth rate, and trade balance further contribute to the AUD's value. Interest rates and quantitative easing. The RBA's interest rate setting directly impacts the AUD's relatively high interest rates compared to other major central banks support the AUD, while lower rates have the opposite effect. The RBA can also employ quantitative easing and tightening to influence credit conditions, with quantitative easing being AUD negative and tightening being AUD positive. China's economic impact. China's economic health significantly affects the Australian dollar. A thriving Chinese economy boosts demand for Australian raw materials, goods, and services, driving up the AUD's value. Conversely, a slowing Chinese economy reduces demand, impacting the AUD negatively. Positive or negative surprises in Chinese growth data often have a direct correlation with the AUD's performance. Iron ore's influence. Iron ore, Australia's largest export, is a key driver of the AUD. Higher iron ore prices generally lead to an increase in the AUD's value due to increased aggregate demand. Conversely, lower prices can have the opposite effect. A positive trade balance, influenced by iron ore prices, further strengthens the AUD. Trade balance and currency strength. The trade balance, representing the difference between exports and imports, is another critical factor. A positive trade balance strengthens the AUD due to surplus demand from foreign buyers seeking Australian exports. Conversely, a negative trade balance has the opposite effect on the currency's value.